I want to get to my next guest. He says that the market decline started because of Europe, but now investors are looking for full-scale risk reduction. Mike just outlining why that would be. Jeff Palma is a global equity strategist at UBS. Jeff, good to see you again.
Good morning.
Okay, so hearing what Mike just said, you've got to, I mean, if I was an investor, I'd want to be taking money off the table now in the U.S.
Well, there's no question that there's a lot of risks out there, and they've certainly become very clear over the course of the last few weeks. My sense is that things probably got a little bit ahead of themselves in March and April. We probably got a little bit complacent to some of the risks out there. And while we're on the high end of a broader recovery, a broader correction in markets, I think we shouldn't really fully lose sight that there is an economic recovery underway. I think it's too soon to say that everything's going to roll over and double dip, and I think we should focus on the fact that for now this is about a risk reduction exercise and not a full-blown reassessment of fundamentals.
But Jeff, is this all just a matter of time, a matter of timing, really?
It's possible, but again, I think it's too soon for that. I mean, we've had a 10 to 15% correction in markets in the S&P from the high levels that we've seen over the course of the last year. I think we're going to see a moderation of economic activity across the board over the balance of this year as we see some of those base effects start to moderate a little bit from where we were last year. But in the broader scheme of things, I still think we're supposed to think about a recovery.
Well, then, if we were to take that view, then, Jeff, there must be some buying opportunities here.
Yeah, I mean, I think that there's a couple of different ways to play this. From a sector perspective and from a stock perspective, I do think that very moderate risk positions are the right trade. Somewhat balanced between cyclical and defensive sectors, quality stocks, but across a regional space, I think that there's opportunity across different regions. We like the U.S. market. We like emerging markets. Asia in particular, I still think over the medium term can do reasonably well.
Right.
And we like Japan as well.
But would you be rebalancing your assets now?
Well, I mean, I think it depends on where your starting point was. If you started from a very aggressive cyclical risk position, I think moderating the risk is something that needs to be done.
So buying gold?
Well, I mean, buying gold is one way to protect the portfolio, but even within an equity-only context, moving towards the U.S. market, which is a little bit more defensive, owning a couple of the more defensive sectors makes sense. But panicking in the face of big moves and very high volatility is almost certainly the wrong strategy as well.
Jeff, before I leave you, what happens if the markets close below the levels that we saw on May 6th?
Well, I mean, I think we're going to be in a reasonably extended period of risk reduction. It doesn't mean moves are huge to the downside, but I think we're going to have to deal with a fair amount of volatility because there's not a catalyst that's really obvious to result in a bounce. I think it's just going to be something that has to work through. I think most likely outcome is we start to move a little bit sideways as things start to normalize a little bit.
Okay, Jeff, good to see you before the weekend. Jeff Palma, the global equity strategist at UBS.